Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, May the 5th. Happy Cinco de Mayo. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Some economic data out earlier today. Great Britain Services PMI came in at 52.3, was expected 53.6, so slightly lower than expected. Here in the United States, we got unemployment claims that crept up to 274,000 versus 261,000. Now, all of these unemployment numbers heading into tomorrow are going to be pretty interesting to see how they work out. If you remember yesterday, we saw ADP was a bit lackluster. Today we're seeing unemployment claims creep up, which means more people going for unemployment. Maybe some of the people are just coming off of the sidelines that weren't quote unquote unemployed because they stopped trying to look for a job and were discouraged workers. Anyway, on to natural gas. We got natural gas coming at 68 billion cubic feet, was expected 69 billion cubic feet, so pretty much in line with expectations. Could have been a bit of a drawdown. The Midwest is seeing a little bit colder than normal weather right now. And then we also had the St. Louis Fed, James Bullard, speaking earlier today. He also speaks later on today, but he is very uncertain as to the future path of the interest rates for the FOMC, which is the Fed fund rate. The Fed fund rate is the rate that the banks charge one another for their reserves. So if somebody has excess reserves, they charge an interest to somebody that is slightly below their reserve requirements. So that's the basis of all interest rates. Then goes up to prime rate, and then therefore up to all the way to the like the 30-year bond. So all interest rates are kind of based upon the Fed fund rate, which is what the FOMC decides. All right. So anyway, on to the overall markets. As you can see here, crude oil is up $1 on the day. Basically, these lows were printed overnight as soon as the session, or the night session, which starts, in the afternoon yesterday. But as soon as the market opened, it started going up. On the day session today, we are basically unchanged from where the market opened. It rallied right off the bat up into the 46 handle, and then has since come off by about $1. So they were up almost $2 this morning, relatively soon after that opening. Onto the NASDAQ and the equity markets, /NQ here, as you can see, is up 11 points on the day and off of the lows. The overall markets did test the unchanged, and E-mini S&Ps actually went into negative territory as well, and they are up 4 points on the day, as you can see here, /ES. This is the breakdown of the daily chart. As you can see, after the economic data that we got for the unemployment claims, the market really started coming off pretty hard, as you can see here, and since recovered somewhat. But it's been a pretty back and forth day. As you can see, came off, rallied back, came off again, tested the lows, like I said, off that economic data. Now it seems that the market has no memory and is starting to rally into positive territory, despite that unemployment claims number. Onto a couple of things that I've done. Southwest Energy, several of these I did yesterday, late in the day, Southwest Energy being one of those. And with Southwest Energy, I did the June 13-14 call spread and collected 26 cents for that. And with The reason why is I'm pretty bearish, as you all probably know, in the overall energy sector. So I sold the 13s, which is pretty close to where we're trading now, but decided if we go break above this 14 level, I want to be out of that. So that's why it's a pretty tight call spread on there. On to DIA. Now, if you guys watch the webinar on Steve Primo's stuff, several of these strategies really worked out nicely. DIA is not one of those. The overall markets, as we know, has gone down, so this directional trade, which happened on Monday, we got the buy signal. It looked really good the day I put it on, but the market has since come off a little bit, and I followed the rule that I talked about in that webinar. You can go to protraderstrategies.com and find out all the rules that I did around this Steve Primo strategy number 4, but it was 50% loss on this, and we broke below this low, this doji here. And that's really the signal to get out. So once we did that yesterday, I decided that was time to pull the plug on this one. So a combination of things. And I was in the May 179.5 calls. I actually bought those, so the 179.5 calls. And I paid $1.19 for those, got out for 61 cents. So that was like 50% of what I paid for that. I decided to get out when we got there. All those things coming together according to those rules that I came up with in that webinar. Caterpillar, you probably, if you've been following my trades, probably cover this a little bit better today. Caterpillar's continuing to come off, but I was at 50% of my max profit, so following that rule, I decided to cover this one. I had on the June 82.5 call spread, and originally collected 84 cents. I bought it back for 42 cents, so right there at 50% of my max profit. And today, you could probably do that a little bit better. On to the earnings trade that I did last night was in Whole Foods, and in Whole Foods I did the May that expire tomorrow. They're the weeklies, the May 6 weeklies, I guess is for lack of a better way to describe that. It means that they're expiring on May 6th. And I did the 25.5, 31.5 strangle, and I sold it for 56 cents, bought it back for 13 cents. And when I went on right before this, you probably cover that for about 10 cents better almost. But following my rules of the earnings, I cover that right off the bat in the morning. I like to get those off within the first 15 minutes of the opening, just in case anything crazy happens, like in Tesla. Tesla was up nicely this morning after earnings, and then actually went down on the day. I think it was up about $4 or $5 and then came off. It was in negative territory by about $4 or $5. But if you have the directional happening in your favor, that's the time to get out of it. And I decided to do that with Whole Foods. That was Whole Foods is the only earnings trade I did out of Tesla, Whole Foods, BABA, and MGM. And I haven't even looked at the rest of them. I did look at Tesla, but there just was not enough premium for the risk that would be involved in doing those strategies. So I decided to go with the one that had the highest implied volatility and get that volatility crushed. The rest of them, implied volatility was so low it didn't seem like we were going to get much crush, so that's why I chose this one. And as you can see, we did get that volatility come out of those quickly. All right, that's about all I got for you guys today. Friday, which is tomorrow, going to be doing the webinar on long put spreads, so check that out. Go to protraderstrategies.com. The long call spread was a big hit. A lot of people joined up on that one, and it's a lot of fun when there's a lot of people out there, because we had a lot of, probably the most back and forth with the participants that I've seen so far in any of these webinars. So that was really good. All right, go to protraderstrategies.com. Check that out. That's all I got for you guys today. Happy Cinco de Mayo. Drink some margaritas, and if you can't take that, take it easy.